Hello everyone, again, this is our live coaching session for February 12th, 2018. I am here to answer any questions that you may have. So if you give me a moment, I'm trying to get put in a position here where I can see comments and things of that nature as best as possible. Alright, if you guys can hear my kids in the background, we all had a pretty long day today and mommy is getting ready for bed, so please excuse any noise that you may hear in the background. But all right, how's it going, Miss Shirley? Good to see that you're with us on tonight. So we'll give everyone a couple more minutes to come on here. Again, today we're going to be here to answer any questions that you may have. I may do a quick video on placing orders, kind of walk you guys through anything. All right, Miss Shirley, can you hear me okay? Give me a 1 if you can hear me. I know it's probably a few second delay, so I'll give you a moment to answer that. All right, that's fine. Yes, that's why I do the videos for you guys to be able to go back and review. As I like to say, take your time, pause, and rewind. So awesome. So she can hear me. Awesome, awesome, awesome. All right. Yeah, you guys just keep in mind we do have the video in the Facebook group. So just click on the video link inside our private Facebook group, and you should see an album called Getting Started. So you guys can everything you need to get started trading excuse me, Forex, it's there. All right, so it is now 9:05. All right, so what I am going to do is go over placing trades, just to go over the 4 different types of trades in the using the MetaTrader mobile app video that I did for you guys on last night. I kind of briefly went over that. I'm gonna go ahead and attempt to do it again on tonight, again just for better clarity. So let's just go ahead and get into that. Give me 1 second. Let me get this set up here. That. All right, and you guys should be seeing my PowerPoint. You're probably seeing a web browser right now. I'm just checking to make sure that the PowerPoint did happen. I didn't say anything about a trade. Not a trade in particular, so not 100% certain of what you're referring to there. it's going to come through. Again, I'm just waiting just to make sure it is coming through. Alright guys, awesome. So we're going to go ahead and talk about placing trades on tonight, and if you have questions I will answer them. If not, then we're going to go ahead and end the video, the live coaching session. Alright, so we're going to be talking about placing trades. We're going to look at market execution and pending orders. Again, on the mobile app, market execution is listed as instant execution. Alright, so let's go ahead and get into it. Market execution. We use this type of trade to immediately start a trade. And when we do this, the trade line will be placed at the allowable asking price, which includes the spread. Again, some of you guys were having issues with setting your stop losses and your take profits. The brokers, they make their money off of the spreads, and so if you're ever trying to put in a stop loss or a take profit and you're not considering the spread, then it's not going to allow you to place the order or place the trade. So you have to adjust everything to the allowable pricing. That goes for the stop loss, that goes for the take profit, before it will actually allow you to put in the order for a trade. Now this is only if you put in a stop loss and a take profit, and I'll show you this here in a second. But if you do not, then you will be able to immediately jump in a trade. So let me just show you what market execution looks like. Alright, let me go. Let's see, we are currently in the we are in the Asian session. Let me see if I can find Euro, New Zealand. Let's go with the Aussie. Let's go with Aussie JPY. Let's go ahead and throw that out here. Alright, so with market execution, again, we use this to immediately start our trade. So if we think that the market is going up, we want to put in a buy order for a trade. So we will just simply adjust our lot size over here and then click buy. Let me do that because this is a new demo account I set up for tonight. We click buy. Alright, so as soon as I click buy, you guys see that this dotted horizontal line showed up. Alright, and so this is our trade line. I'm going to zoom in a little bit here. Now, as you see, this line is just above the current candle that is forming. So this is the spread that I was talking about. This little spacing in here. This is the spread, and so this is the allowable price line that you could jump into the trade. And so when we immediately go into a trade, that's why you're in the negative until you know, pricing actually goes above your trade line for a buy or below your trade line for a sell. So this is the market execution. This is the instant execution. All right, you just determine which way you think the market is going to go, and you hit buy. You adjust your lot size, and you're going to either hit buy or you're going to hit sell. It's just this placing trades are just as simple, you know, as that, as far as the market execution. If you think it's going up, you're going to click buy. If you think it's going down, you're going to click sell. All right. So again, that is the market execution. Let's jump back over here to our PowerPoint. Now, the thing that possibly gets individuals tripped up are the pending trade types. All right, the pending trade types. There are 4 types of pending trades. We have the buy limit, and we would use this if we think price will reverse up. So right next to this, I have these arrows drawn out here. I have this green line to represent the current price. All right, so you will put in a pending buy limit if you think that the current price here is going to go through a particular price and then reverse back up through that price. All right, that's a buy limit. So as soon as that price goes through and then back up through the price line that you put in, then your trade will be active, and it'll place you into the trade. All right, so sell limit is vice versa. If you think the price will reverse down, all right, then that's when you're going to use a sell limit. So again, current price would be down here, and then again, this green line represents the price level or price line, or the amount of the currency that you think is going to go through and come back down through. Then you will put in a sell limit. All right. The next one is your buy stop. All right. This is the one that I typically use the most. Your buy stop is if you think price will move through a particular level of pricing. All right, so let's just pretend like we're trading some type of US dollar currency pair, and we think that the current price, or we know that the current price is $1, and if we think that it's going to shoot up, it's going to reach $2 and shoot up through $2, then we'll put in a buy stop for $2. Again, meaning that we think that because current price is at $1, it's going to reach $2 and go straight through $2. Then we'll put in our buy stop, and as it goes to $2.01, it's going to jump us into the trade, and we'll be in the profit. All right, and vice versa for the sell stop. If you think price will move down through pricing, then that's the type of trade that you want to use. So again, if let's say this is $2 here at the very top right here, and you think that this green price line is $1, and you think price is going to go from $2 down through $1, then you're going to set the sell stop, and as price goes to 99 cents, which is below $1, then you're going to jump in the trade automatically. All right, so let's just go through what that looks like. We more than likely you won't be able to actually see the entire thing executed, but you will be able to see how it is that we place these. So all right, so let's take a look at our buy limit. All right, so all you would do, well, we're going to take a look at all 4 of them. So all you would do, we're going to delete these, just hit the X here. All right, so to set up your pending orders. You can do it several different ways. You can come here and well, let's not. I'm not going to show you that. I'll show it to you. You would right click on your chart and go down to trading, okay, and then you can do new order, all right, or you can hit the F9 key on your keyboard right here, all right. Then also you can come up here to the top and click new order. So whichever way you like, you can right click on the chart, go down to trading, click new order. You can press F9 on your keyboard and pull up an order that way, or you can click new order here. So whichever you prefer, doesn't matter. Either way, you're going to be brought to this dialog box. All right. Here would be the pair that you're wanting to set the trade for. All right. Your volume is the lot size. Your stop loss is your stop loss. Take profit is your take profit. Comments are for if you want to put in any notes in and go back and look at your account history and kind of, you know, see what you were thinking. All right, the type is where we're going to change the trade type or the order type. Either it's going to be again an instant execution, all right, or a pending order. All right, so I'll show you guys the easiest way to set an instant execution. And again, you just hit the buy and you just hit the sell. Here, you would set your stop loss, and let's say if we do sell. All right, so again, if you have not set your stop loss and or your take profit correctly, if you have not considered the spread and the allowable asking price for the trade, then you're going to be met with this dialog. You just hit OK, and as I showed you in the video before, you would just move it until you get to a point where it will take the order. All right, so that's the instant execution. I'm just going back into that dialog box by clicking new order up here at the top. All right, switch over to pending order. All right, so again, here is where you will set your buy limit, your sell limit, your buy stop or sell stop. Again, buy limit is if you think that price is going to reverse up through a pricing level, and sell limit is if you think price is going to reverse down through a pricing level. Buy stop if you think price is just going to go straight through a pricing level, and sell stop is for if you think price is going to go down through a pricing level. So this is how you set them. You know, you would either choose buy limit or sell limit, buy stop or sell stop, based on what you think the market is going to do. All right, and so again, buy limit if we think that it's if you think price is going to go down and then go back up. So you would set your buy limit, let's say, you know, at 85. Let's say if you think it's going to go down and go through here. All right, we'll just, it's probably not going to allow me to do it, but let's see. If you think it's going to go down and then go through 85.501, of course it wouldn't, but again, in this case, then we would just move it until it allows us. And all you want to do is just to be able, and I'm probably going to have to set my stop loss here. You just want to be able to jump. Oh, I'm sorry, no wonder. All right, this is going the wrong way. 148. Okay. There you go. I was going the wrong way. I do apologize. All right. So now, if we again, the buy limit is for if we think price is going to come down from this point and then reverse back up and go through this point. Once it actually comes down and go back up through this point, then we will be placed in that trade. I'm going to delete this, and all I'm doing is going down here and clicking the X next to that trade, and same thing for everything else. Your buy limit, your sell limit, your buy stop and sell stop. Again, I don't too much use the buy limit, sell limit. Typically it's the buy stop or sell stop, just because the strategy that we use, we basically we trade with the trend that the bankers or the dealers are making. So typically I'll just use a buy stop or a sell stop for, again, if I think price is right now it's at 85.41. So if I thought that price was going to go up through 85.61, then I would put in a buy stop. Okay, then I would put in the buy stop. If I think price is going to go down through 85.265, then I would put in a sell stop. Then I will put in a sell stop. So again, those are the different ways to place trades. Again, we have the market execution. Again, this is going to immediately start a trade for us. And then we also have our pending orders and the 4 different types of pending orders. Again, since we're talking about placing a trade, again, I do my best to show you guys the easiest way possible to do something here on MetaTrader. And so that would be the instant execution. So let's say if we think that this market is going up, we would change our lot size to, if you want to do a standard, again, which equals 10 US dollars, or if you want to do a mini lot, which would represent the dollar, the US dollar. So $1, $2, $3, $4, so on and so forth. All right, all the way up to $9. Okay, anything above that, you're into your standard lot, which is $10. Below that, your 0.99 is basically $9.90 US dollars. So you, again, just adjust your lot size, and then whichever way you think that the market is going to go after you've done your analysis. If you think it's going to go up, then you will hit buy, and immediately it has placed in a trade order for us. The trade order is set at 85, and I'm down here in the terminal. Our trade order is set for 85.469. All right, 85.469. All right, current price is 85.447. It's going up. So once we get to 85.460, well, actually 85.470, that's when, for this particular buy order, will be placed in the trade, and we'll begin to make a profit as long as it continues to go up. Now, if you want to set a sell loss, the easiest way is to hover your mouse over your trade line, left click it, drag down. Simple as that. Drag down, let it go, and you set a stop loss, meaning since you're in this buy trade, if price goes down and once it reaches your stop loss, it's going to take you out. All right, you're basically saying, hey, market, once price goes against my trade this amount, then take me out. I don't want to lose anymore. I don't want to lose any more money. Now to put in a take profit, if you want to say that, hey, I'm not going to be greedy, but I want to get out once I reach a particular, uh, or once price has reached, once the market has reached a particular price level, you're going to hover your mouse again over the trade line, left click it, and drag up for a buy trade. Alright, you're going to drag it up until you get the right amount of pips. If you just look over here to the left, right here, my mouse is going left and right. Look over here to the left again. This is about 20 pips right here. So if you want to say, hey, I'm going to take 20 pips out of this trade, and once you get to the price gets up to the 20 pips, then you will be taken out of that order, all right, or that trade. Let me show you how to quickly do a sell, and it's the same thing, just vice versa. Adjust your lot size, click sell. All right, so now since you're selling, meaning you're gonna make money as the market goes down, you now want to hover your mouse on your trade line, left click, and drag up for your stop loss. Why? Because we're in a sell. We make money, we make profit as the market goes down. If the market goes up, it's going against our sell trade, and so we want to set our stop loss and say, hey, market, if pricing goes up against our sell trade, this amount, please take us out of the trade because we don't want to lose any more money. All right, and then so again, to take profit, you're gonna hover your mouse over the sell trade line, left click it, and drag it down. Why? Because we're in a sell order. So as the market goes down, we're making profit, and we're saying, hey, market, once the pricing reaches this level, I'm going to take all that I've collected thus far and take me out, take me out of the trade. Very simple, very, very straightforward. Very simple, very straightforward. So that is placing orders with the MetaTrader PC/Mac version. Unfortunately, with the mobile version, you can't click and drag that easily, but you can still set your stop loss and you take profit. And if you're wondering how to do that, then I would just suggest you to take a look at the video that was uploaded on yesterday, February the 11th, 2018. If you don't want to go through the news feed, then you can just go to the video vault. I have uploaded that as the number 7 bonus video for the getting started in the private Facebook group. So, all right, let me just take a look to see to self stop. All right, yeah, I'm just gonna have to really just encourage you just to go through the videos and see exactly what everything is. MetaTrader 4 is the trading platform that we use, and self stop, I was saying stop loss, stop loss, stop loss, stop loss. So again, just go through the videos. You guys make sure you're going through the videos and just taking your time and just watching the videos. Take your time, pause, rewind. If you didn't quite hear something, feel free to play it again and ask for clarity as you did. So, all right. So are there any? I'm gonna just see if there are any questions for us on tonight. Whether you have a question on placing trades, or anything that we have covered so far up to this point. Just going to give you a few minutes because I know that there may be a little bit of a lag. All right. All right, guys. So again, I hope you guys are you're doing well. I just want to mention, um, please take your time. Please be patient with yourself. If this is the first time that you're ever seeing this platform, do know that there is a learning curve. It took me some time to get it and to understand it. Maybe a little faster than others, just because of my makeup, but that does not mean that no one else can get this and understand this. So we go over the basic things that need to know to be able to place a trade and to make money. So again, just continue to watch the videos, pause and rewind. Whenever we have these live coaching sessions, you guys know we have them on Mondays at 9 o'clock. So be in attendance and have your questions answered, and also take advantage of the live coaching sessions, or the one-on-one. They're currently scheduled for Wednesdays and Thursdays at 9 o'clock, allotted for 30 minutes. So be sure to register, and more available times will be coming. So again, be sure to register, and we'll do everything that we can to get you up to speed. But trading Forex, it is simple. It 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 is simple, especially with the strategy, the market beater trading strategy that we use. Again, you just have to. The hardest thing you may have to do is adjust your sleep pattern for a little bit, and jump in and get the trade and get your 50 pips. So it's not hard. It's not hard. I know of little kids who trade Forex. I know of older senior citizens, if you will, who trade Forex. Middle-aged trades Forex. So yeah, it's just a matter of analyzing your chart and determining which way the market is going, and putting in your buy or sell trade accordingly. So all right, guys, let me check back one more time. Our review the videos. Okay, awesome. Yes, review the videos. Awesome. All right, guys. So until next time, as always, if you stay in God, you will stay in control. Oh, yes, I'm sorry. There's one other thing that I wanted to do. Is I want to do a quick analysis of our trading status for today. All right, so let's start with a Euro USD. Again, I'll typically look at the four more volatile pairs for the London session, to carry out the market beater trading strategy. And so they are the Euro USD, the GBP USD, Euro JPY, and the GBP JPY. All right, so let's just take a quick look at today. All right, so it's going to be this middle section here, looking at the Euro USD, and I'm going to put in some horizontal lines so you guys can see. Now typically we are uh, 5 hours ahead, but the terminal time here has us 7 hours ahead. So so instead of looking for 8 o'clock, I am looking for 10 o'clock. It's 10:30. I'm on a 15-minute chart. All right. So this is the beginning of London session right here. All right. This would have been 3 o'clock for us this morning, February 12th. All right. And so the setup was not all that great today. So what I typically do, if the setup is not all that great, if I feel like it, I will do the first hour of session trading, and that is where we take a look at the first hour and we see what the high was within the first hour, and we see what the low was within the first hour. Okay, and then once price breaks, either once it breaks the low of the first hour here. All right, again, so this is just a 10 o'clock line. This is just an 11 o'clock vertical line. And so within the 10 o'clock and 11 o'clock, that's our first, these are our candles with the first hour worth of candles, okay? All right, and so I set a line of a horizontal line going across the high, a horizontal line going across the low. And so once I see that price breaks it really good, then I would jump in, make my pips, all right, and then ride it back up once I see that pricing is going back up. Because again, you know, we really didn't get a good setup during the Asian market here. Here, let's see. Asian market should be 1 o'clock for us. Alright, so this candle here, and I'll show you what I'm talking about. Let me just change this color. Alright, so this is the start of Asian, okay? And so as you see, like at the start of Asian, you have like a lot of volatility, and typically the Asian does accumulate. All right, and we don't trade during Asian. Now you can, but you typically it typically looks like this. You don't get a lot of movement. This particular day you did get a lot of movement. So if you were up between 6 p.m. Eastern Standard Time to 3 a.m. Eastern Standard Time, then yeah, you could have jumped in here and lucked out and see, you know, that you had a pretty decent move here. Again, this typically does not happen, so don't expect to always see this. You can, you know, you will see it from time to time, but don't expect to always see it. So this particular move, let's just go right here. This is a 45 pip move. So for the Euro USD, if you were up, kind of following this, and you know, you would have actually been able to get in like right down here, then you could have made your 45 pips during Asian. But again, we had we just didn't have the setup for the market beater, so you could have came in and just kind of wrote the trend down, you know. Again, do the first of session, first hour of session trading strategy. Again, where you set you see what the high was for that first hour, you see what the low was for that first hour, and then you wait for pricing to break either or. In this case, it first broke the low, so we would have put in a sell order and just rolled it down. All right, and then when you see it going up, you jump out of the sell order and you jump back into a buy order, and you ride it for as long as you can. And let's see, if you would have did that on the Euro USD, you would have had an opportunity for, let's see how many pips here, 56 pips. So you would have had your 50 pips, you know. And if you were doing them at, you know, if your account was set in such a way to where you can trade $4 a pip, there's your $200 for the day, moving close to $1,000 a week. So no real setup for that. The question was asked, you know, if I don't see the setup, what do I do? Again, that's typically what I do. I jump over to the first hour of session trading strategy, see what the high was, see what the low was, put in the pending order. All right, that's basically what I do, because I'm not gonna just sit there and wait for it, depending on, you know, how my day looks, but put in a pending order for the sell. All right, more than likely I would not have set a take profit. I would have wanted to get as much as possible, but I would have put in a trailing stop of no more than 20 pips. So that's typically what I do. And then if I'm around and I catch it in time, I would have caught it going back up. Okay. I was doing a different trade today, so when I saw that it really didn't set up for us, I didn't do it. All right, so let's take a look at the GBP USD. All right, we're gonna find London. Here's London right here. Start of the London session. When I say London, that's what I mean. Start of the London session. Gonna look at 1, 2, 3, 4. Gonna look at that first hour. Take a look at the first hour. All right, so Asian is back here again. A lot of volatility. No setup for our move. So again, yeah, wouldn't have been able to do it. I do see some other trading strategies here that you could have used as well, but the first hour session would have worked. So we set our high, we set our low, bunch of consolidation in between, but when it would have broke, I would have again jumped in, got what I could get. Then when I saw that it was going back up, I would have jumped out, have taken what I could take. Let's see. On this one, again, this is hypothetical because we always know that hindsight is always 20/20. I don't want to be one of those guys who just jump out there and say, "Oh yeah, I would have done that," but in all actuality, I would not have. So this candle probably I would have waited for this candle to form, this green candle, this first green candle to form before I jumped out, and so that's 13 pips. That's 13 pips right there. Came up, went back down, could have jumped in, probably would have came down right here. So you're looking at 19 pips right there. That gives us about what, a little over 30 something all together there. Maybe you could have caught it going, you know, going up. Now kind of looking at the setup for tomorrow morning, it kind of does look like we're gonna be able to use the market beater strategy for it. It's not a lot of movement how it was here. Yeah, everything was just kind of gradually going up. Here it's a little more consolidated. If anything, it may go down. So all right, so I'm not doing an analysis for tomorrow for tomorrow just yet. We're just kind of going through, looking at our setup here for this morning, this past morning. So let's look for our 10 o'clock, which would be 3 o'clock Eastern Standard Time. Then 1, 2, 3, 4. Then we're going to take a look at within the first hour. Again, a lot of consolidation here. Now the end move was up, but again, you know, we look for consolidation, a false breakout, and then the real breakout, and we really don't have that here. There's a lot of volatility, really no consolidation. You really can't, you know, you can't call this like a false breakout. You can't, you know, call this a false breakout because it did go down, but then it shot up, but then it went down again, and then it went up. So you know, you probably would have just had to again do the first of hour. Again, we set our high, set our low. Oops, I grabbed the wrong one. Set our high, set our low. We just saw it break, jump in, grab as many pips as you can. Don't be greedy. You see it's going up, so just go ahead and get out. Me personally, I probably would have went when I saw that this green candle had reached here. I would have tried to jump out, grabbed 11 pips. That's fine. And then also, when I had to realize that the market was going to go back up, just try to ride it for, you know, for whatever you can get, you know. So again, we don't see our setup every single day, but we will typically see our setup every 3 out of the 5 days. Last week was awesome. We had the setup 4 days out of the 5.5 days that we can trade Forex. So last week was pretty good. Let's take a look at the GBP, JPY. So again, no real setup for us. So this had a little bit of consolidation, not so much of a movement, but again, you know, you had a move down, then a move up, then a move down again, and then a move back up to consolidate. So we really didn't have a setup. So yeah, typically if I see that, you know, I'm going to try to execute the first hour of session trading strategy, and then I also, if you guys just like to know what it is that I do, I also will jump over into the inverse pair trading strategy. I really like the gold, just because you can make a whole lot of with a few pips with the golds, selling or buying the gold. You can make a pretty decent profit depending on your lot size. So yeah, typically always doing this every day. I'll do this on what's called swing trading, where you take longer trade positions, and you trade, you know, based on the day. But yeah, you know, you can just take a look at gold versus the USD JPY. Gold is up here, right? Pricing reached all the way up here, all right. And for the USD JPY, it reached down here. So you can just kind of see the opposites, they're inverse. So typically, if gold is going up, then the USD JPY is going down. So if you can't read it, then that's a really easy way to try and to read and to figure out what the chart is doing. Gold does typically have like a 50 pip spread on it. So you just want to make sure that you're trading at the correct lot size for your risk management, and you're not being greedy. But again, you're trading at the recommended 1 to 2% of your total account, risking no more than 5% of your account. I would really like to see you risking maybe a little less, maybe around 3%. But yeah, so this is what I typically do. Do my inverse pair, gold and US dollar versus the USD JPY. I'm putting my trade there, and so there are opportunities, there are ways to make money, to get your pips. All right, let's check and make sure no one is asking anything. All right, awesome. All right, so I just want to do a quick analysis of the past day for the pairs we typically trade during the London session. Hopefully we'll get this set up on tomorrow morning. So I'll be up, and if I catch it in time, I will do a live analysis